Hey everybody, good morning. My name is Mike Fairborn. Welcome to Trading Futures. Today, I did want to talk specifically about some of the more general and straightforward approaches to trading futures. Of course, just a simplified approach. We'll be looking at that. We'll also be looking at pivot points as well. So look forward to diving into that with you today. And did notice the markets are down a little bit this morning. Welcome to all of you in the chat. Great to have you here. Plenty of chat activity already. Look forward to any questions, comments you might have, and do see many recognizable names. So it's great to have you back. If you're new, let us know in the chat as well. Great to have you here. But on that, welcome to Cameron May as well in the chat, a good friend of mine. Appreciate Cam being here to help out with any questions, comments. Folks, let's dive into some disclosures to get going here. All right, quickly note that futures and futures options trading does involve substantial risk. It's not suitable for all investors. As you can see there is a risk disclosure statement available for that you should read prior to trading futures products. Futures accounts are not protected by the SIPC, that is the Securities Investors Protection Corporation. Also note some additional points listed here on this slide. Okay, next up here, wanted to note too that the paper money software application is for educational purposes only, as Schwab does not recommend the use of technical analysis as a sole means of investment research. Now, information here, just broadly speaking, is for general information purposes only and should not be considered an individualized recommendation or personalized investment advice. Finally, wanted to note that stop orders are not guaranteed in execution due to exchange rules. Based on certain conditions at the time of activation, the exchange may reject or substitute an exchange designated limit order for the originally triggered market order. Wanted to add to that too, as well as we do sometimes talk about going short in the market, that when short selling to establish a position, the upside risk to close that position can be unlimited, as there is no upside cap on how high the price of an index can rise, or for that matter, the price of any commodity could potentially rise. Okay. Let's go ahead and share our main screen and take a look at what we've got. Now, first thing I notice every time, and folks, I think many of you already have this in place, but it is really quite helpful to have just this watch list up on the left-hand side mark, because you do get a view of what's happening with futures overnight, etc. So very helpful there. I do have a percent change column as well, so I can quickly go through and just see, hey, quickly we can see that everything's in red right now, but it's not too bad. We're not too off center. In fact, we've got just small amounts. I mean, we're not even at 1% to the downside yet on any of these. It looks like the NQ though is the lowest, and it looks like the YM is holding up the best, at least in terms of what we can see right now. Now, the markets did just open. You heard the opening bell there, perhaps. Let's go ahead and take a look at the big picture of the markets first, so we can kind of get a general feel. It's always helpful, to take a look big picture at the markets, because looking at multiple time frames can be a helpful and effective in the sense of what is the direction of the trend. Now, for example, if we have a trend, a pretty clear trend. We're looking at the past here. This is back in July, where the S&P 500, we're looking at the E-mini here, E-mini S&P 500 index futures were trading down. Well, it's difficult when you have sort of the underlying force of the daily chart heading down to be trading intraday to the upside, right? Or on a shorter term basis to the upside. It's not to say that it can't be done, but you are potentially fighting a longer term trend. And that's why it's always important to kind of get a general feel of where the markets might be bigger picture here. So what I wanted to do initially first, because we are looking at a market right now, I'm just going to take that study off for just a second. But what is the general direction? Where might there also be resistance that can be helpful? Now, when we're looking at the markets like this, and we are, we've been coming up to like all-time highs as of late. We've been reaching those points as of late. What can be helpful is to use an indicator I've been talking about when you get to these points. Now, traders will use this in other time frames as well, but that's the linear regression channel. You can read about it here, but basically, I'll add it in here and explain it to you as well, what's going on, a little bit more detailed than what's listed there. But this can help kind of give you a general sense of where resistance might be in an upper range, okay? Because what that linear regression does is it basically analyzes two variables, it's time and price, into a single relationship over the time frame that you're observing. In this case, we're looking at a 1 year time frame. Okay, so as we do that, it's looking at this and it plots the stock prices along a normal distribution. The normal distribution, you're getting a main line in here, almost like a bell curve where that linear regression is at. You've heard of reversion to the mean if you're high or on the low end. It can be helpful. By the way, it's from that, it plots these standard deviations above and below that normal distribution. So this can help traders to get a general sense if a stock is overbought or oversold, because you can see that there's a history of maybe potentially bouncing off that upper channel line or bouncing off of the lower channel line down through here, maybe support through here. One way that a trader will do this is they will let's go ahead and narrow in a particular range right now. So if I'm looking at this level here, let's just say this is a point we came very close to it on the lower end. But if I'm right here and I'm looking at a test of that lower standard deviation and we come down below that level. Now, as long as the trend is still up and still strong, what traders might do is they might say, well, as soon as I start to cross above this level or close above that lower standard deviation, then that could be of interest to us, right? We could put a plus sign here. They could say, well, that could be, there's an indication here that it might be bullish and it might revert back to the mean of the single relationship between time and price is what we're looking at. And then, if it breaks above this level and is still trending higher, then we could test the upper range, which is up here. But also, if you're touching off of this end and you start to close below it, the upper standard deviation, then you could retest back down to the mean, or what traders would refer to as a reversion back to the mean. So that is what we're looking at here. And I just wanted to point this out because it could give us a sense of, sort of trading in this tight channel here, which has been fairly tight. You can see the range that we've been clearly within over that time frame. If we were looking at a longer term time frame out towards the end of the year, and we were also exploring the possibility of a seasonal move, which I've talked about, you can see that over here too, on the average price over a 5-year basis of the ES, we just kind of sort of moved up very slightly to the upside here, but we could see a similar move here. We may or may not. Of course, this line is representative of 5 years worth of data. We do have times where we went down, but on towards the end of the year. But on average, we tend to go up, and we tend to go up just slightly. And it's kind of similar to what we're getting. We might be getting like kind of an average year. So you could be watching prices to see if they might touch across that upper channel or really hold close to that mean middle line as well. So just a couple of things. And it is, like I said, can be helpful to look at, particularly when we don't have resistance to the upside here. And we are just trying to kind of consider, hey, how are we doing in terms of the year end? Is it sticking with seasonality, and how is the trend doing? Right now, it looks like a seasonal year end. Of course, that could change, but we did also break a new high over here, and we shall see what happens. So this can be drawn across any of the market indices and can just be a helpful guide because, again, we're trying to consider, what direction could the daily chart be in so that when we shift to intraday or shorter term, where we're placing our trades, do we have the daily chart working in our favor or not? Another key to do that too, that could be helpful, I think a lot of traders will use, is what's happening with the short-term moving average. Let's just substitute these out real quick. I'll take out the linear regression line and put back in an exponential 10-period moving average, one that moves a little bit quicker. So as we explore some of the price action that's occurred above, when prices get above the 10-period moving average, you can see that a lot of times there can be a lot of price movement that can occur when you get above that level. I mean, that was pretty strong. You actually got a bounce. You never closed below there, and this rally right here was fairly strong over that entire price range, right? Well, how are we doing now? Is it working in our favor? In other words, has the daily chart broken above. It's got to be above the 10 period moving average. Is it holding above it? How does the trend look too? I mean, here's the other thing. You know, prices could be going like this. I mean, and you could be getting above the 10 period here for a very brief moment if this is a longer term trend down. I mean, that's a scenario that does unfold. But we're kind of looking and saying the trend is up. So we got the trend in our favor as of now. Now, do prices hold above that 10 period moving average, that exponential 10 period? And that, because that's just giving us one additional indication that prices could be stronger on a daily chart, right? Because they're greater than the 10 EMA. Price is greater than the 10 EMA, right? Looking for an average there, exponential moving average going through there, EMA. So we've got that right now. So, okay, so now we can start kind of building on that a little bit too. And as I'm going to keep this on, we can come down here and look at a few others as well. And you can see over here when we really kind of started to get going here into an upward move, well, we were above the 10. As there was some price action here. YM down. Okay. And since we've been down, has it been tricky, you think, to trade this on a shorter term basis? Since we've been below, price has been going lower. The trend is up, but we're still below the 10. Well, let's look at the 60-minute here. Has that been challenging to trade to the upside? Yeah, it's mostly down, right? That's what that simple, I should say that exponential moving average could help you out with. Here's a 5-minute chart. It's not to say that there weren't times in here where it broke higher, but remember, we were below on a daily chart, we were below that 10 EMA. And so just a general guide again that some traders could use on the ES, trend up and price above the EMA if we're looking at the bullish. A bullish scenario. It might be just the opposite if we were looking for a bearish, right? The trend would be down. And then what we would be doing is trading below the 10 period EMA on the daily chart, getting that time frame down first. So we have kind of like an underlying direction that might be in place and then going intraday. Okay. So, having said that, I wanted to point out too on the ES, a quick note here. I've got the money flow listed down below and the RSI. Now, with the RSI, as you can see down here, the RSI actually has not been, I mean, we've been one thing that traders will do with the RSI, just another guide here on a daily chart, just to look at maybe some of the market internals as it relates to momentum using the RSI. Are we greater than 50 or less than 50? Some traders will say if you're above 50, then that's bullish. Now, if you're below 50, it would be bearish. We've been above, and we've been actually holding above that level for quite some time. One thing that has really been interesting here, though, is the money flow. The money flow wasn't just kind of going up and sort of meandering to the upside with the trend. And that's a positive because it's just an indication what money flow tries to do, which is give us a general sense. Is there more buyers than sellers collectively? Accumulation of that volume. Are we seeing more buying versus selling? Look over here. I mean, this is a very, very mild move. I'm going to show you where we really began to spike higher. When we began, and let's zoom in on this. Okay, so let's zoom in on this time frame here. Where did we really begin to sort of break above a range? Well, a couple of places here. I mean, so just using money flow, there was a kind of this long sideways channel of money flow here. We kind of took out a little bit of a range there, but by the way, we took it out again there. This was a really big spike. Oh, shoot, I didn't mean to twist that over. It's just kind of a little bit over here, about right there. When we began to break above this high right there on the money flow, what did this do? This kind of gave us a general sense that we might take out these highs. This is what the money flow indicator can help us with. It can give us a sense that prices might be ready to take out this high when you start to break that high on the money flow. Okay, so we're using this guide. This is a really big spike. So kind of a more mild move on prices, but it shows that there might have been quite a bit of buying activity behind the scenes supporting this trend to the upside. I just thought that was really interesting because it was such a big, big move on money flow relative to maybe what we'd seen over the prior couple of months. So can be of interest. Cumulatively speaking, there could just be more buyers coming in as prices go higher, and that would be considered a positive as well. Okay, so that's kind of the basis there. Now, what we would do next, what we could do next, is we could look at some intraday charts and see how they're looking in terms of a potential setup. Because again, we're above the 10, the trend is up. So let's go ahead and take a look at the ES right now. I'm going to zoom in. Now, what I've got here is a different way to look at this, because let's say, for example, we're going to ultimately be trading on a 5-minute chart. Well, we started off with a daily, and then I'm moving into a 60-minute or a 1-hour chart to get a general feel of the trend with just a lot more data, what that looks like. Are we seeing any potential price patterns? And let's just do this. Let's sort of, I don't want to use the words pretend because it's not real, but we're looking at this is kind of like a daily chart in a sense. We're looking at the 60 and saying, okay, so what would we do in our normal sort of trading routine if we're looking at a daily chart? But we're seeing prices go up higher here, and we can see that, did we take out this high? We did. We broke higher, and are we kind of finding a little support here? Well, on an hourly chart, yeah, and by the way, there's a little bit of volatility at the start of the day. A lot of times you just get a big spike in the market, and we got a high here and a low here. A big move, right, in that range. And that range of the high and the low, that just the open there might be there on this. That was actually, I guess, just right before we got started here. Yeah, but there was a big spike here. But normally when the market opens, that's not exactly the market open, right? Because it was an hour back. So let me just go ahead and point to this real quick, see where we're at. Yeah, that was at 6. So this is like right here. So we don't even actually, a portion of this, a 30-minute chart would actually show us the open. In fact, let's just do this for now. I'm going to go into the 30-day, 30-minute. We'll use this instead. You're going to see a similar chart. You just, we get roughly twice the amount of data. We're plotting each bar here on a 30-minute as opposed to a 60-minute chart. Let's do this because that does give us the opening right here in my time slot, Mountain Time Zone. It is 7:30, right? Now, what some traders will do is they will take this. First of all, they'll look at the pattern here. We know we've got a strength on the daily based on the references that we're using. We're breaking higher. We're pulling back to a support level. And now the anticipation is, well, is there the possibility of a flag pattern occurring here? Will we get a flag maybe to the upside here? That's the question, right? If we're looking at a pattern, we broke these highs. We're testing the support. It is a 30-minute chart. A lot of times I use the 1-hour chart. I'm going to use the 30-minute because I want to explain one more detail here before I go into the 5 and look for what an entry could potentially look like. Okay. So one thing that some traders will do is they will wait for 30 minutes, a full 30-minute bar, to let the market kind of work itself out. I mean, there's a lot of buyers and a lot of sellers. Sometimes, economic announcements come out frequently just before, just after the market opens. And so what some traders will do to give them a sense of the direction on the day is they will take the high and the low after this first 30 bar has been achieved, right, completed. So here's the high and here's the low thus far. We're only in roughly 20 minutes or so. I got another roughly 11 minutes to go right now. But when this bar is complete, we take the high and the low. And then what traders could do is they could say, if we take out this high, they might be bullish. If they take out this low, they might be bearish. I'm just going to write these in. So they could look at a bearish move here if prices take out the low after the bar is completed on the first 30 minutes. And they could be bullish if it takes out the high. Now, is that asking a lot? Not really. Look at the time frame we're in. We're in a 30-minute chart. And I mean, prices can move a lot. So we're just basically stating, hey, get me above the high of that first 30, get us past some of these announcements. And by the way, you'll also see earnings in there too that can impact the market. Earnings before market open, that can be something that can also be, kind of keep things kind of volatile in that first 30 minutes. You get above there and then you can plot for the rest of the day. And basically what some traders will say is they'll say, hey, listen, if I'm above this level, I am not bearish the entire rest of the day. Okay, so if they get above here, this point, they break above that level, they're bullish. If they get below this level, then they're bearish. They do not turn bullish, even on the day. So we're kind of adding a couple of different components, right? The daily got us here to be bullish, but now we're saying we have a whole extra level of being bullish, and that's got to be, so we've got to trade above this level is one way to use a multiple time frame scenario here, right? We've got to be above here. We also have to be, maybe there's got to be a trend like we looked at. We did see that, we'd broken higher, so there could be a reversal of what we had seen, kind of a downward move. It'd be a reversal here. We might be holding a higher low. So there are some positives maybe setting up on this shorter term. Not quite yet to the 5-minute chart, but we're kind of just still assessing this. And by the way, one quick note, as you look at this, you're going, my gosh, Mike, this takes, are you serious? I got to look at the daily, a mid sort of short term, and then a shorter term, like a 5-minute. I mean, if you're looking to get the different time frames, yes, but it actually, if you get used to it, it's really quite fast. You could do this. I mean, I guess it just kind of depends on, how far you are along in getting comfortable with that, but it can actually go quite fast. Just go click, 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 and you just, because you already know what you're looking for. But does that make sense? I'm going to go ahead and take a look at just see if we've got any questions. I know Cameron does a great job of covering those, but in case there's something I can show visually, I want to throw that out. Let's see what we've got here. Okay. Oh, I think Cam's got us all caught up. Excellent. Terrific. Okay. Let's do it. Okay. Let's go ahead and go now to our shorter term chart where we might actually be looking to place the trade. In this case, the paper trade. But here we go. I mean, we're exploring this, right? So let's just see what we've got. So still quite a bit of data. We're actually just kind of now looking at what we think might be the flag portion of the pullback. Well, does that 30-minute time frame still matter? Yeah. I mean, if we're building on it, it does. And you can see that it's kind of like, oftentimes it's right where that volume spikes. In fact, I can just go ahead and take this pointer off so I can see where is the 730. Yeah, right at the volume spike. That's oftentimes the dead giveaway as to when we might get this move right there. So there you have it. So there's your 730. So with that level, we can now see what the activity has been within that 30-minute time frame. It appears that this is our upper line right there. So again, for prices to be bullish, some traders might wait for a break above that high before they get going. And by the way, when you look at it, it looks like it could be sort of a point that could be, let's see, there's some possible resistance through here. Yeah, perhaps right through there. So maybe an area that traders might want to look just to see to get above it anyhow, right? So we could come up and get above here. Sometimes that can hold as support, but then they could be looking at a possible, I just put a plus sign here for a possible bullish move to the upside. All right, would we ever go bearish? Or look to short, go into the negative here? Well, remember what the 10-day EMA told us. Are we going to go against that? Remember, if we do, the daily chart, right, is above. The prices of the daily chart are greater than the 10 EMA. The trend of the daily chart, this is my indication of prices, but also the trend is higher too on the daily. So do you really want to go against that on a short-term basis? Remember, futures can move when they move, right? I mean, there can be quite a bit of price action that can occur, and I want to explore, what does that mean in terms of values, upside, downside on those? That's the next point, because as we're kind of looking at this and setting this up, that's just an indication we can kind of consider here. Now, this can be drawn. We've got to wait until we get to like this 8 o'clock point. You're going to have different time frames, folks, as you're in different time zones outside of the mountain time frame, mountain time zone. But we're getting close to maybe where we can draw that low. Okay. So that's what I wanted to look at right now today. Now, I'm going to talk about some of the micros that can be, I would say, especially for beginners, there's just not as much price, I should say, value movement, right? Just the amount of the dollar movement that can be affected by the change in let's say a dollar to the upside or a dollar to the downside on these futures, it can be significantly less. In fact, when you're looking at the micros, it's like a tenth of the value, tenth of the well, let's just pull it up right now so I get my wording right here. But the tick value size, right? Here we are on the ES. The ES right there, as you can see, lists. Oh, I pull that back again. The ES has, so for every one tick, and it's that's the minimum tick size. The tick value is 0.25. It's 12.50, right? So for every $1 move, well, we're looking at about $50 up or down. Remember, it goes in both directions. You get your initial margin over here too. If we go ahead and do this, which is really, I think, where it might make sense for a lot of beginners that are getting used to kind of that level of price movement. What does a tick do? Look at this. The MES, it's still the same tick size. So for every quarter point move, the tick value is only $1.25 initial margin. Everything pretty much across the board. Well, in terms of the tick value and the initial margin requirement, as we were saying, is about a tenth of the normal value. So you see over here, it could open the door too if like you wanted to do 2 contracts or 3. Let's say a third, or what is that? 30% of the normal ES contract is what I'm getting at there. 3 contracts of the micro ES. Now, how does the micro ES look? Well, you're looking at it right now. And it does have volume, right, associated with it. And notice the spreads are just a quarter wide right now. I mean, in terms of how they're moving. And so the other key thing is we always like to see these futures contracts that do have liquidity. Well, you're getting that liquidity. It might be a little bit less, but it's for smaller size trades, etc., might be just fine in terms of what you're seeing right now. By the way, this can vary over time as well. Obviously, in quick market conditions, always be mindful of that, with any of these. But now you're just looking at each tick, 0.25 up or down, of being $1.25 up or down, right? Up or down based upon the movement of the underlying here. So if we were looking at $1, we just times that by 4, well, we could say that it would be about $5. Not about, but $5. It would be $5. Now that's different from the ES, so a full dollar move. And so in other words, if you're going 60.74 to 60.75, it's a $5 move per one futures contract. Right, with the ES, we already talked about this, right? That's where it really kind of ramps up and you go to your 50. And that could just be a lot more, but it just depends, right? Now with this too, just one thing to keep in mind, if we did do, let's say, 3 contracts, well, there's going to be 3 commission charges there too. So just be mindful of that. That's a factor. And you want to just verify that every time you get in, and be, multiple contracts, there are multiple commissions that are associated with that. All right, did we hit our 8 yet? We are just about a minute away from hitting 8 o'clock, but you get a pretty good sense of where our high and low might be. I wanted to get this in first, and then I'm going to actually take a look too, because I don't think we're going to get an entry here on the ES. We'll look at the others, but we're down today. Yet on most of these, not the Dow. We saw the Dow actually below its EMA, but the trend is up on the Dow. But the daily has been positive on the ES and the NQ. So we might just want to wait, be patient. Be patient. It's tough to do sometimes, but be patient for us to get maybe north of that level, is the approach we're talking about today. Okay, so there, I think you have the high and the low range right there. And one thing we can do too, if you don't already have it set up, you can right click up here. And here's the body of the candle. This could be interesting too to look at. I'm just going to go ahead and use the high of that 7:30 time frame. If I click on this and I just go down into create an alert here, a single alert, just let me know if I'm out or whatever. Notify me that I'm just going to put above resistance, question mark, come back and take a look and check and see if it did break above resistance there. So there are ways to set up the Thinkorswim platform so that it can email you, text you, or just make a sound. You might be in front of your computer so you can hear that sound, but if you go to setup up top, application settings, there are your notifications right there where you could add an email address, you could add a text. And by the way, there's just going to be some additional information when you do that, but yeah. So that is available. It's a really awesome feature to have on the Thinkorswim platform. Now over here, I'm in front of my computer, so I would hear an alert. This is already checked. So some cool things if you're taking a look and you're just trying, it's maybe easier to be patient if you're not always just like focused on, every single tick. You can wait for an alert to occur and then go take a look and see what's going on. Okay. In the meantime, though, let's do this. We want to go ahead and take a look at our pivot points too and see how we're doing, just broadly speaking. And I think we got a general sense because we did look at some of this. I'll go full screen here. Coming back to the pivot points, I wanted to review that first because that's kind of a general approach. Like some of you do already trade equities out there on a daily chart. This is different. Obviously, we're looking at futures contracts, but using some of the same technical skills is what I really wanted to tap into the first bit of our discussion. And I want to do that at least while I'm teaching this class going forward. Ben Watson will be teaching this class into the new year. We'll be picking up on some of the same, similar concepts. But I think that's going to be helpful for multiple timeframes, those of you that are interested in building on that. Okay, so we'll do that next week as well. Get in the habit of doing that. Now we're looking, though, at the pivot points. It's another trading approach that some traders, investors will use. And here we are looking at the ES right now. We are below that level. Now, sometimes traders will still use the pivot points regardless of the direction of the daily chart, above or below that 10 EMA. In this case, we are above it, but that's with the exception of the YM. Okay, so if we're considering that, well, the YM actually has shown weakness too, but we did come up and hit this level. We'll see what happens if that acts as resistance. This is the main pivot point line. These two, you have to say, are the strongest up top, the ES and the NQ. The RTY breaking lower. Let's pull it up right now and see what we've got under our pivot points right now. There is the ES. And so this is always the area where you want to determine, are we going to go to the upside or the downside here, right at the center pivot point? It can go, a lot of times traders will trade these up or down around their center pivot point. I'm going to go over here. We'll just keep scrolling through these. In fact, I'll just open up my window and click on them. There we go. So we're trading right at that center pivot point with the NQ, the YM, bouncing off that level and coming down. This could be a potential bearish trade, right? Off that level. And then sometimes traders will take this to the midpoint or to this point here. And I did bring this up just a little bit earlier. I'm just going to hit it again because, it is a key point. But, anytime we are looking to, when a short position is established, the upside risk to close that position can be unlimited, right? Because that's what we were talking about earlier. Prices can keep going because there's no upside cap as to how high the price of the index can't rise here. All right. So having said that, let's clear this off. And then let's look at the Dow. That is the Dow, sorry, the RTY. Now, by the way, as prices are dropping here, okay, by the way, the first 30 minutes you're going to get on the Dow are still probably like right here and right there, I think. Yeah, right there and right there. Are we below that? Yes, we are. So we're bearish. Could this set up then for a continuation, since the price of the stock too is below the 10 on the daily chart, below the 10 EMA? This level, support 1 and support 2. This could be a potential trade scenario. And that's how this would work. How some traders will do this is if you go 2 ticks below that S1, they would trade this to S2. And this is something you could look at. And then 2 ticks above that S2 is where they would potentially close it. Now, sometimes I mentioned they could close it at the midpoint, at the 50% level. Some traders will do that. But oftentimes, if these aren't too far apart, relative to, let's say, the S1 and the center pivot point, you can see it's quite a bit smaller. A lot of times traders will just elect to go for this full range. So they would basically look to sell a contract or more than one contract, maybe if they're doing the micros, and buy that contract back here and trade this down if that's the scenario that unfolds. Okay. So if we have enough time and if it hits that, we would definitely do it. One thing to keep in mind is notice we did bounce off of that support, that S1 level overnight. Now, sometimes these can be areas you might want to watch, but it depends. If you bounce down here, sometimes you'll hit it and then you come back down and then break it. There can be all different kinds of price movement that can occur here, but this is one we're looking at right now. So this is one I could potentially set up here to sell. What that would look like is this, if it does unfold. It would be something like this. We could come over here and we could say, let's see, we've got the level. We've shown this the last few weeks. If you want to go back and look at some of the archives, I could show this to you too. But we could find a point on the. Let's go ahead and give us a little bit more room. Now we can actually see these levels, right, popping up, and we're going lower here. Excuse me, as we do this. But let's say, for example, it dipped below that point. That level is at what here? Let's see. Let me just look at that a little bit closer here. See what we have. It is at okay, so 44. I'm sorry, 44,095. Okay. So right in that level, we could look at potentially creating an order here. I'll show you what that looks like. I am going to go into my template to do this. Okay. And I'll show you how this sets up. In fact, I have, Emily, we'll just set these up, let's say 20. By the way, before I do that, what about the YM? Do we have a micro of the YM? I could just click on here. We do. I know we did. I was just trying to click in. Yeah, YM. So you can come over here again before you get into this and look at that MYM and just see that is for a $1 move. So the tick size is a one, right? It's 50 cents for every $1 up and $1 down on the micro. Okay. We'll just start off with this one. I'm going to just do one, but obviously, some might say, hey, maybe I want to do two. We're just doing paper trades here, but just as an example. See how prices are moving lower. If it breaks, we can go ahead and just, we'll let this fill. But here we go. In fact, I'll show you a couple of little tricks too. You don't need to go all the way down. This is kind of where we're at right now. But you can see over here, I'm looking to sell, and we have different areas here on the chart that we could set this up at. Boy, let's go ahead and do this right now. Let's go ahead and set the. Oh, I gotta get these balls set up. Sorry, one second. Let's get this. So these are the targets that would be in place, and if they're too close, they'll automatically get filled. Let me make sure I've got a dot in there, and I believe I do. It's so small. So if I expanded my font size too high, and I do that so you guys can see the screen, what's going on here. I might just wait and just go sell market on this one, by the way, just because it's moving right there, as opposed to setting a limit price over here on this. And a quick note too, let's see if we're almost there. No, not quite, but you could be watching this. We could just hit a sell market, right, on our one contract here. And if it does break below there, and then what that would do, we can adjust then at that point in time our limits, the stop and the limit order here, right? In fact, it's almost there. It's just tempting us, right, as we're looking at it. But I might just throw one on just to show you what it looks like. Even though we'd technically be waiting for a dip down below here, if it dips down just a little bit more, I might just put one on. Technically, it's still showing support, but if we were to dip here, remember that could put on the trade. Okay, so yeah, and then it would set our orders. Now look at that, it bounced off that level. Okay, so we didn't get to that level yet, but we could adjust different points, right? As we're looking at this. In fact, I'm going to scoot on down here, and I'm just going to throw on like an order, and I always go through and take a look and make sure you're reading that order. Again, as we mentioned previously, I'm just going to read this again, just so everybody's familiar with it, but stop loss orders on futures not guaranteed execution due to exchange rules based on certain conditions at the time of activation. The exchange may reject or substitute an exchange designated limit order for the originally triggered market order. Okay, I'm going to go ahead and send that. Oh, shoot. Okay. Oh, we got an issue there. Boy, we're running all kinds of things. Um, I might need to adjust the amounts here in the paper money, folks, but you get the point. What that would have done is simply just set up a sell right there, right? So a sell order here, and then we would have, if it would have gotten triggered, we would have had an exit, and we look at our exits based on our ATRs, and then we might have a target. I'm just kind of eyeballing it. The target would have been down here at the S2 level. This is one way to do it, though. All right, folks. Well, I hope you found our discussion informative. Again, we looked at bigger picture timeframes for sure. As we went through this, we started with the daily chart, and now we broke it down actually into the pivot points. We went through and we placed some trades the last couple of weeks on pivots. So if you want to take a look at that, you can look at our the playlist. In fact, I'm going to go ahead and just try to pull that up real quick while I've got that, because those were some actual examples of us going through the pivot point trading methods and actually placing those paper trades. So I'll plug those in real quick. Let's do this. And I'm going to show you actually something else here too. Here is the playlist into the chat. There you go. So last couple of weeks did have that. All right, folks. Hey, if you get a chance, bottom right-hand corner of the screen, click on that subscribe button. Would love to have you if you're not already on board with us. We've got over 130,000 subscribers. If you like today's presentation, definitely click that like button as well. I would appreciate that. It does help get our content up more frequently, within that YouTube algorithm. If you did like it, you got to like it first to click like. It's got to be useful for you. But I'm going to do this real quick. I'm just going to show you up top here under Schwab Coaching. You can go ahead and take a look at our on-demand webcasts. We've got plenty of those in here. Here is our live webcast schedule. Just a quick note on that as it does come up. I mentioned to you that Ben, who's an excellent coach, just like Cameron, they're going to be teaching. I'm sorry, Ben's going to be teaching futures first part of the year. I've got it for next week, though, so I'll look forward to that for sure, you guys. But let's see. I wanted to state that a couple of changes here. You're going to see. You want to pull this up. I'm going to throw this calendar out for you too, so you guys have this too in the chat. You can take a look at these. But I'm going to be I'm going to be teaching swing trading. By the way, if you want to see what's in the next month, it's right here. Click on January. They just have swing trading at the top of the list here for me to discuss. So I was just going to mention that it's on Tuesdays right there. And yeah, and then you've got other coaches, teaching different topics. There's trading index options on Wednesdays. Also on Wednesdays, trading price patterns, after hours trading on Thursdays, and then market movers on Fridays. So still 30 webcasts, 30 live webcasts per week. We're actually over 30 live webcasts per week. And would love for you to be able to take a look at this stuff. Of course, you could find this stuff on YouTube. And again, I showed you over here, there is that on demand that's listed right there at the Schwab.com coaching. I'll put that in the chat as well. Folks, it was nice to be here with you today. And we will finish it off there. Talked a lot today about tying in longer term time frames with shorter term time frames as we looked at the futures markets as well. So with that, see you next time all. Thanks.